We're looking at what opportunities we have here going into our afternoon in the second half of the week. We've had this great sell-off here inside of the indices, but our leading indicators have not confirmed a downtrend inside of the broad markets. And first, we're looking here at DXY. DXY ran right into a profit target of a long setup, but it is inside of a short from our previous highs that we had on June 24th to our most recent lows. And you can see that resistance level in its 61.8% line up here is the 101,326. Now, why is that important? Because currently there's a negative correlation on the S&P and the NASDAQ especially, but all of the currencies, the commodities and the precious metals and Bitcoin, the cryptocurrencies, everything has a negative correlation except for the Dow and the Russell. And so if the dollar weakens from those levels, what happens to the indices and those negative correlations? They go up. And you can see where we were coming into the beginning of the daily doldrums and the dollar rolled over and everything caught a bid. Now, there are going to be new long setups here, like the one that we had traded on Monday and then Tuesday yesterday, which just completed a profit target, back down here at the 109.17. But until we get to those levels, at least in US dollar terms, there will be a tailwind for the indices. Let's move on here to our bank chart. And bank has fallen right into a new daily long. Now I'm going to zoom out here to a larger time frame to show you what this looks like. There's just a progression of long setups that we've been inside of. We completed a profit target to a previous traditional, and then we fell out of a 50% short yesterday, and then this morning we went straight down. Where did we go straight down into? A new daily long setup in our series. And so the financials also have not truly broken down to confirm that there's a downtrend on the indices. We haven't broken through this series here. So we're now dollar and bank, no confirmation yet of a longer term downtrend inside of the indices. Let's move on to the VIX. And this is where things get really fascinating. For the summertime, I'm going to start these draws over here so we can kind of rebuild this chart, so you can see it how it all gets pieced together. For the summertime, the VIX has been incredibly technical. Now, you can see here that we have the VIX expiration. And this is the brand new July contract, and it is the contract until, I believe it's July 22nd. So we still have a whole other 3 weeks here to go, or 2.5 weeks to go. Let me get that counted right. Excuse me, today it is exactly 2 weeks for this new July contract. And then we're going to be going into August. But what you'll notice about when we start zooming down to the smaller time frames is that our old original contract lows to highs had traded and bounced, and then we had a failed breakout at highs up here. And so last week, Monday, we had broken through this series of longs. This is really important. We broke through the series of longs. So we started this downtrend into our resistance. So last week, Monday, we had this 50% short. That completed. We had a next measured move. That short traded on Thursday. That completed. And then we broke not only the series, right? We broke the series, and we broke it off of the exact line in the sand, which is 1721, rounding down to 20, and then adding a tick. That's where we were double bottoming. Now, here's what is amazing. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.